Fast, cheap, and easy, you might have heard you can only have 2 out of the 3, but with Vanguard ETFs, you can have all 3. What's up guys, I'm Mrs. Invest. Today I'm going to teach you how to invest with Vanguard ETFs in Canada. They produce awesome investments with low fees, and it doesn't matter if you're a beginner or an expert investor, Vanguard ETFs are awesome for any investment portfolio. So let's go through everything today that you need to know, the basics about investing with Vanguard ETFs. So if you want to invest in Vanguard in Canada, there's 2 ways you can do this. The first way is to hire a financial advisor who will manage your money for you and who can invest with Vanguard ETFs on your behalf. Spoiler alert, don't pick this option. And option number 2 is to open your own self-directed investment account. Think of like RBC Direct Investing, TD Direct Investing, CIBC Investors Edge, Questrade, whatever platform you want to use, and then buy Vanguard listed assets by yourself through a DIY investing approach. So why invest with Vanguard? Almost everybody knows the term Vanguard. It's almost a household name these days. When you think of sneezing, you think of Kleenex. When you think of ETFs, you think of Vanguard. It's just the way it is. So why is that? Well, a couple reasons. Number 1, they've been around for a really long time. So they've got a track record. They're a trusted brand name when it comes to investments, and their owners are not looking to profit off of us as investors. So their main goal is really to keep their clients or us happy with the investment products that they provide. And investing with Vanguard, they have very high quality investments. The investments have low fees, which is a big thing. And the third thing is they're easy to invest with. If you've ever heard that, you can only pick 2 out of the 3, fast, cheap, and easy, well, Vanguard's figured it out so that you can have all 3. And that's why it's a good idea to consider investing on your own with Vanguard, because it's so easy and the fees are so low. It just doesn't make sense to pay somebody a super high fee to do it on your behalf. So what types of ETFs can you invest with Vanguard? Where there's 4 broad categories of ETFs. The first are index ETFs, and these ETFs seek to track a broad market. Think of the TSX, the Toronto Stock Exchange, or the S&P 500. They mimic the returns of that index. Now within index ETFs, you can have equity index ETFs, and those are based on stocks, meaning the ETFs hold mainly stocks. This is really good for young people or people who are just willing to accept a little bit more risk in order to get greater returns. And the reason it's good for young people is your time horizon to retirement or whenever you're going to need this money that you're investing is really long. So if a severe market crash happens, you can hold through and weather the storm, whereas somebody who needs the money right now, like someone who's retired and needs cash flow in order to sustain themselves, they may not be able to accept that level of risk. So the other type of index ETFs are called fixed income ETFs, or fixed income index ETFs, and those mainly hold bonds. And bonds have a little bit more of a safety margin, but you can also expect lower returns. And so again, for older people who need the money and are not willing to risk the volatility that comes with investing with equity index ETFs that hold stocks, this gives them a little bit more of a safety net or a safety blanket with their investments. So when you think of index ETFs, you've got 2 types. You've got equity and you've got fixed income. The second type of ETF you can invest with Vanguard is active ETFs. Now this is where someone who works for Vanguard is paid to actively manage this ETF, to handpick stocks to try and do better than what you could get with a broad market index ETF. Now the catch here is the management fees are significantly higher than what you're going to pay with the index ETFs, because somebody has to be paid behind a desk to manage this ETF. Now, whether they can actually beat the broad market for the fees that you're paying, that's questionable. Maybe some years they will, maybe some years they won't. Over the long term, it's really a toss-up. But that's basically what an active ETF is. Think someone is actively working at this ETF to try and get you the best return. Whereas an index ETF is totally passive. It just follows the market for better or for worse. The third way to invest with Vanguard is using asset allocation ETFs. Now, where a regular ETF is a collection of many stocks, you can think of an asset allocation ETF as a mega ETF. Within it holds many ETFs. And the purpose that they've created this for is for it to be a one-stop shop, all-in-one a portfolio encompassing ETF. So they do have a couple of these asset allocation ETFs, and the point of them is you buy shares of this one ETF and it's already diversified, everything is done. In theory, you could just buy this one ETF and you would be done as far as an investment portfolio, and then you just keep adding money into that one asset allocation ETF. And the fourth way to invest with Vanguard is with mutual funds. Now, these are becoming less and less popular. Cedar's walking around. Hi, Cedar. They're becoming less and less popular with our younger generation. They're often seen as sort of mom and dad's guy with investing. The fees are significantly higher, and again, it's questionable as to whether the returns over the long run are any better than what they would be investing in any of the previous ETFs. So these are kind of falling out of favor, but they're still available if you want to invest with them. I personally don't. Now, the most popular ETF categories of these four are the index ETFs and the asset allocation ETFs, because the fees are low, the returns are really good, they're easy to invest with. I've yet to be called by my ETF to tell me there's a broken toilet in the middle of the morning, like if I had invested with real estate. So they're just super easy, the returns are great, and you can start investing with such a small amount of money and just keep throwing it at the ETF month to month. Especially if you're young and you have a long time horizon with investing, and especially if you're able to tolerate a little bit of risk and volatility, meaning that the money that you invest you don't need in the short term for anything. The index ETFs and the asset allocation ETFs are awesome, especially for beginners, and honestly for anybody, even for seasoned investors. They're just awesome. So the next thing is, when you go onto the Vanguard website and you're looking through ETFs, there are a lot of terms, acronyms, and really weird abbreviations associated with ETFs. And this alone can turn you off completely if you are new, because you just feel like you can't possibly understand anything and not know what you're investing in. So let's go through these terms together, and then that way when you're on the website, you're gonna know what you're looking at. Now, the first term is ticker symbol. This one's pretty simple and most people probably know it, but I thought I would include it here just in case. ETFs often have really long, complicated names made up of many different words, and it would be hard to only refer to them by their name, because you'd be talking for like 20 seconds before you've said the name of the entire ETF. So the ticker symbol is a 3-letter abbreviation that stands for that ETF. And so that's often how you'll hear people refer to ETFs. For example, you'll hear people say VFV, and immediately you know what ETF they're talking about, as opposed to saying the Vanguard S&P 500 Index ETF. It's very long. So that's what the ticker symbol is. It's the abbreviated term for the name of the ETF. The second term is the abbreviation FTSE, and it's often pronounced FTSE, like when you're playing footsies in grade school under the desk. And this stands for the Financial Times Stock Exchange, and basically it's just an organization that creates the index that the ETF is seeking to follow. So it's just having their organization name in the title for brand recognition or whatever. But when you see that, it means FTSE, and it's just the name of the company. Third, you might see an ETF listed as all cap, and that means it contains all market capitalizations. Market cap or market capitalization basically means how big is the company. Apple has a huge market cap. Mom and pop shop down the street has a very tiny market cap. So an all cap ETF means that it holds small cap, medium cap, and large cap stocks. Large cap companies are worth at least 10 billion. Small cap are 250 million to 2 billion, and then medium are 2 billion to 10 billion. The next type of ETF you might see is an X ETF, an EX ETF. Now, whenever you see X, it's usually referring to geographical regions. So an ETF might say X North America, and what that means is that ETF excludes every stock related to whatever that ETF is trying to track in North America. So it might say total world X North America, and that means that ETF follows every type of stock within that group in the entire world, but it's leaving out North America. Another term is emerging markets ETF. This means that this ETF holds stocks from companies that are lower income, less developed, but that are sort of growing their economy to become more developed and engaging more and more with the global markets. On the other hand, you might see the word developed in the name of the ETF, and that means the opposite of emerging markets. So countries that are advanced with developed economies that interact in the global markets like Canada, US, UK, Australia, developed nations. You might see in brackets in the title of the ETF hedged or unhedged, and it might be Canadian hedged, US hedged, and I go through hedging more in one of my other videos, but basically a hedged ETF means it's going to eliminate the risk of currency fluctuations from your returns, and an unhedged ETF means that currency fluctuation risk is not accounted for at all in the ETF, so whether the dollar rises or falls in relation to your home currency, that is going to affect your returns on the ETF. Another really common one is management fee, or MER, management expense ratio. Now these technically are two different things, but essentially they're very similar, and it's the fee that you're going to pay for buying that ETF. The fees can be super low for some, like 0.05%, and they can get up fairly high to like 0.5% if you're investing with the active ETFs or mutual fund ETFs. And it will usually be expressed as a percentage. Now this is nothing you have to worry about as far as payment. It comes off automatically on the returns off of the ETF you're investing in. So essentially it's invisible to you, but you are paying it, you just don't really notice. And the last two things you might see are a dividend ETF or a growth ETF. Now dividend ETFs, that's kind of your clue that you're looking for yield as far as cash flow from that ETF. And then growth ETF, that lets you know that the ETF is focused more on capital appreciation rather than paying you out cash month to month or quarterly or whatever. So let's go through two examples of ETFs from the Vanguard website and dissect the name of the ETF to know what it's all about. So example number one, the FTSE All Cap Canada Index ETF. That's a mouthful. So if you've followed me so far with the terms, you know that FTSE is just the brand name of the organization that's creating the index. It's pretty irrelevant. All cap means this ETF is going to be holding stocks from large, medium, and small cap companies. Canada means this is stocks within Canada, and index means it's a fairly passive ETF that's going to track this index without any type of active management. So if the market goes up, it's going to go up. If the market goes down, it's going to go down. Example number two is the FTSE Developed All Cap ex North America Index ETF. Developed means the stocks in this ETF are only from developed nations. All cap means you're holding small, medium, and large cap stocks, so good variety there. Ex North America means this ETF holds no stocks from the North Americas, and it is an index ETF. So again, it's going to passively follow the stocks listed that fit the criteria of this ETF. So now you know what the ETF title means. You might be able to narrow down on what ETF you want to invest in. Let's go on the website together and go through the fact sheet of ETFs so you can really analyze the ETF you're considering buying, so you know what it holds, what the returns are, and everything about it. So to get to the Vanguard Canada website, type in Vanguard Canada on Google and click right here on Vanguard Canada. Head over to Individual Investors. And on the top, you can see under investments, all the ones that we talked about here: index, active, asset allocation, mutual funds. Let's just click on index ETFs. You can click on any one. And you can see them all listed here. On the top, you have your equity ETF. So those are the ones that are holding stocks. Lots of them there. And then you have your fixed income or bond holding ETFs. And here, the second column, you can see fact sheet. So it's a very important sheet, tells you all about the ETFs. Let's look at VFV, the S&P 500 Index ETF fact sheet. And I'd encourage you to do this for any ETF you're investing in. Look at the fact sheet. It gives you a lot of information so you know what you're investing in. And here you can see in the gray box under ETF facts, there is a distribution schedule. So if it pays out a distribution, it will tell you how often. This one pays out quarterly or every 3 months. On the right here, you can see the last 5 years returns of what you could have gotten with this ETF. So if you held it, bought it on January 1st and held it till December 31st of that year, what gains your money would have made. Same thing down here, but a little bit on a shorter scale, 3 months, year to date, etc. Good returns on that one there. And some more information up here. So the characteristics of the ETF. You can see that VFV holds 509 individual stocks. That's like buying one share of VFV is the equivalent to buying slices of 500 different individual stocks in one. And under the top 10 holdings, you can see, based on percentage of weight, what are the largest holdings, what stocks comprise the greatest weight of this ETF. So you can see that Apple is 6.3% of VFV, Microsoft, Amazon, etc. And it's no surprise that these companies are in the greatest weight because it is the S&P 500. So you would expect to see the 500 largest companies on this list. But anyways, if you want to know exactly what they are, by the heaviest weighting, that's right there. And if you want to look at it a different way, you can look at sector weighting, and that shows you not the individual stock company, but the sector. And so you can see here that tech makes up 27.6% of VFV. And again, this really shouldn't be a surprise because some of the largest companies in the States are tech companies. And since it's the S&P 500, you'd expect to see tech. But this is really good information to know because let's say you personally already are heavily invested in tech. Maybe you already hold a lot of Apple stock, Microsoft stock, Amazon stock. You might look at this and go, well, do I really want to buy VFV where it's 30% weighted in tech? Maybe that might encourage you to look elsewhere at other ETFs, just to diversify your sectors a little bit. So anyways, that's the fact sheet. I encourage you to look at it for any ETF you're considering investing in. Gives you a lot of information. Thank you guys so much for watching. I hope you found this video helpful. Like the video and subscribe if you're new, and I will see you guys in the next one. Bye.